Welcome back to Explain the Charts. Today, June 24th, 2025, we're analyzing Microsoft, ticker symbol Microsoft. We'll look at the latest news and then dive into the charts. Microsoft closed yesterday at $486, up 1.8%. Analysts have a consensus strong buy rating, with a median price target of $518.77 for the next year. The stock's 52-week range is $344.79 to $487.75. Now, let's move over to the daily chart to look at candlestick patterns and to better visualize where the stock has been the past year and a half. On the daily chart, we can see Microsoft has been on an uptrend for a while, recently hitting its 52-week high. However, it's currently trading just below that high, suggesting some resistance around the $487.75 level. Zooming in a bit, we can see that in late March and early April of 2025 there was a pretty significant dip, but it recovered nicely afterward. Now looking at the 1-hour chart, we see some choppy trading today as it makes its way up to a new 52-week high. There's a chance that we'll see a pullback before it breaks above that level. However, the overall bullish sentiment, driven by AI and cloud growth, suggests that this resistance will eventually be broken. Let's examine the 15-minute chart for a closer look at intraday activity. We observe increased volatility and indecision in the very near term. A key level to watch is $490. Breaking above this would signal strong bullish momentum. Conversely, failure to break this level could indicate a short-term pullback to around $480. In summary, Microsoft is showing strong fundamentals and positive momentum. The analyst consensus is a strong buy, and the company's AI initiatives continue to drive optimism. Key price levels to watch are the 52-week high at $487.75 and the psychological level of $500. A break above $500 would likely lead to further gains, while a failure to sustain above $480 could lead to a short-term correction. Given the overall bullish sentiment and analysts' predictions, a move towards the median price target of $518.77 within the next year seems probable, with a likelihood of about 65 to 70%. However, keep an eye on upcoming earnings and any news regarding job cuts or regulatory pressures, as these could influence the stock's trajectory.